Welcome back to Barry Charles, your one-stop shop for everything finance. Let's get to it. Yes, Ralph Lauren up 34% in 2023, which was surprising to me. So it's up 34%. So is this a stock that maybe you should look at investing into? Well, we're going to do some research right here, right now, and see what is happening with the stock. Why is it up? Why maybe it should be down? There's a lot of things to look at. Let's have a look here at Ralph Lauren, the stock. We're going to do a stock analysis. We're going to look at revenue, net profit, earnings per share, dividends, free cash flow, the assets versus liabilities, return on invested capital, shares outstanding, the whole works right here, right now. If you know this channel now, you should know exactly what we're going to go on and talk about, give you all the analysis of Ralph Lauren. And then we're going to right at the end, if you stay right to the end, we will give you a possible intrinsic value of the stock where it could possibly be a good buy for you. Not financial advice. Do your own research before you invest into any stock. Invest at your own risk. Let's get to it. Welcome to Barry Charles, Ralph Lauren. Let's have a look at the stock. Why is it making waves? The revenue of 6.4 billion is up. Up from, it's going very well. It's going up and up and up. So that's a possible positive from 2021 was at 4.4 billion. It was a little bit more steady in the last year or two, but from 2021 it was a very good jump. But the net profit only 22 million. That's a big one. Really something going. So they really need to get that going. 522 million, sorry, but too low there. But from the net profit to that, it's very low. So there's a lot of work to do on net profit for this company to really get them going. The 52 weeks, we're looking at $82 and 135. So you're somewhere around the middle at the moment at $110 in terms of the stock. So it has dropped from the highs, but it's still higher up from a year ago. So what does that say for the stock? Is it, with the drop, is it a good time to maybe buy? Well, let's do a little bit more digging. So earnings per share of 9.4, that is very nice. P ratio of 12, so they expect there not to be much growth in this company. Short interest I found interesting, nearly 13% for Ralph Lauren. And they know something we don't know. That's a big one for their company. Dividend of $3 at about 2.6% dividend yield, so that's not too bad. Assets of 68 billion, but that's down from 4 years ago. But the positive is the liabilities is 43 billion. Has been a decrease over the last couple of years, so that is a positive. But it's not even 50% like I like it, so that's a little bit too high between the total assets and total liabilities. For me, free cash flow 231 million. And I've noticed it's very inconsistent, up and down, up and down, up and down, but that may be because of some acquisitions along the way. That's something you have to look into. Long-term debt of 1.47 billion. That's not good compared to the free cash flow at times. That'll be something I'll be looking to getting rid of if I was them. Shares outstanding, 65 million. This has been a very good stock for you. It's continued to go down from 8.1 million shares outstanding to 6.5 in 2023. They have very much given back to you. So that is very much a good positive for this company if you're looking to invest into Ralph Lauren. Return on invested capital is also very good at 15%. So with all these metrics involved, what does Ralph Lauren have to do? Well, net profit obviously is clearly one. They're going to have to really push to get that skyrocketing. They've got to pay down their long-term debt, make free cash flow a bit more consistent for mine. Get that going. Continue to do their shares outstanding, and their return on invested capital is very good. So all these metrics look like buy. Not financial advice, but this is very good metrics for Ralph Lauren. But now let's have a look at a bit of the intrinsic value of this company. This is what you've been waiting for. We're going to look at the Graham's calculator, trade range, which looks at the share price, earnings per share, growth rate, with the current bond yield, which gives you an intrinsic value up to a certain point. So let's have a look. At $110, we're going to say the prices might be totally different from time of recording. Right, 9.4 earnings per share, growth rate of 5%. This stock is $181 intrinsic value for only 5%. Wowza. We take that up to 10%, we're looking at $279. Then we look at putting the earnings per share up to $13, then you're looking at $380. If we keep that $13 and then get 20% growth, this stock is a $650 stock every day of the week. Now, is Ralph Lauren going to be a 20% stock mover going forward? I do not think so. But even with all these other metrics, this is some sort of valued stock looking at the future for this company currently. Yeah, so if I'm looking at the stock right here, right now, what do I see as a possible entry point for you at home for intrinsic value? Well, we have to add the dividend in, for instance. I'm going to be conservative with this company and say they're only a 5% growth from here. You'd want it to still go down in price. You want it to get to $80, $70. Gets to $70, load the boat. But you could load the boat now and you could be going sweet. If it doubled its earnings per share from here with 10% growth, you're looking at nearly a $500 stock. So, but I have to calculate that there's a dividend involved in all this. So I'm going to say on the low end of the intrinsic value is about 140. So you've got to get to $70. Now that's on the worst case scenario. Well, not the worst case scenario, you can go to zero obviously. But in terms of a slow growth rate, if you can get Ralph Lauren at about $70, then you're probably looking at to get a margin of safety of 50%. That's where you want it to go. If you're looking to invest into this company, not financial advice, you do your own research before you invest into any stock. I'm just a random guy on YouTube. Just and enter at your own risk into any stock. But yes, Ralph Lauren to me looks like a stock that looks like absolute potential to be a decent winner over the long term. But yeah, you want it to get to 52-week lows or even lower than that to really start to see a good time. But obviously they got the long-term debt. If they could get rid of that, that would be something good. But improving their net profit is the key. They really got to get from their revenue down to the bottom line. They got to improve that free cash flow. It has been quite good, but they want to push that up a bit more. So it's just something that Ralph Lauren will have to do on that side of things. But thank you so much for joining me here at Barry Charles. And I hope you have a great day out there. Remember to like and subscribe to the channel. Have a great day.